And we're kicking off our coverage here at the Metals and Minerals Conference in San Francisco. Joining me this morning is Frank Holmes of U.S. Global Investors. He's also a speaker here at the show. Frank, good to be reunited with you again.
Hey, it's good to be here and seeing you.
So you kicked off the show today. What was your message to investors here in San Francisco?
I think the biggest message is be contrarian. I've just come back from a trip to Asia. I spent a week with CEOs in India. I was in Hong Kong and Singapore. And it's just so important to recognize what is taking place in these other parts of the world. And what's a real shocker to me is that India has 600 million kids under 25. 600 million. And they all want the American dream. That's 2 times the population of America under the age of 25.
But does that dream include gold, Frank?
You bet it does. You bet, because it's deep in their culture, and those gold investors in rupee terms and bought jewelry, etc., they're protected. It'd be interesting if you looked at the savings in India and you looked at their consumption of gold for savings and for jewelry, and you said that's going to be part of your savings, they'd be 30% savings rates.
So, Frank, let me ask you, with the gold prices where they are now, what are you telling investors with the price drop?
Well, the biggest thing we've always advocated is to have a 10% weighting in gold and rebalance. And I was showing investors this morning that for the past 10 years, this model of taking the S&P 90% and our gold funds at 10% and rebalancing each year, you're still up. You're still ahead in your overall fund performance. And even with gold down for 2 years. So this model does work.
Okay. So if I gave you $10,000 today, right, and I know it's not much, Frank, but how much of that would you put towards gold or silver or platinum or palladium? Yeah.
$1,000 in the funds, and $9,000. Yeah, it took you up to $100,000. $9,000 would be in equities and higher dividend-paying stocks, and then you rebalance.
So, Frank, you brought up India. I know you were in Singapore. I know you were in Hong Kong. And I know you've recently written about jewelry trends that you've seen there. What are you finding?
Well, you won't believe this, but gold is trading at $1,700 an ounce. If you want to go buy gold jewelry, 24-karat gold jewelry, and if you want to just buy a simple 24-karat gold chain, it's $1,600 an ounce. And if you want 22-karat gold, you're paying $1,500 an ounce, not $1,200. Okay. So there is a big premium for gold, and it's the biggest I've seen, and I just can't believe it.
And isn't that hurting demand?
I don't know if it's really hurting demand in that context, because they continue to seem to, I guess, you know what, it's hurting demand if you're taking how they used to account for it. So remember that the Indian government, if they no longer sell gold through the post office, and they no longer sell gold through banks, therefore they don't have to record it. Therefore it doesn't make their current account deficit look so bad. However, gold gets through other channels. So that impacts the official recording of it is one thing, but however, that love for gold is not going away.
All right, Frank, so let me ask you, we're coming to the end of 2013 here, about to start a new year. What do you think is still the main driving force for gold? And do you see any bullish factors on the horizon?
Well, I think that gold is extremely oversold. And my message also this morning to investors was be contrarian. Because I've never seen where you can buy oil stocks with dividend yields higher than a 5 and 10-year government note growing at 10% rates. Gold stocks trading at PE ratios, cash flow ratios less than the S&P 500, and dividend rates higher than a 5-year government note is sort of unheard of. And being contrarian, that's usually a great asset class to pick. And mathematically, I like to look at the math of markets, the volatility is extremely oversold. Okay,
so can I say you're bullish for gold heading into 2014? Is that an accurate statement?
I am bullish for that 10% weighting. And I think that if you bought 6 months ago, it's even more attractive now. And what the market has done overall, that 90% weighting is up 30%. So you're still in a good position.
Okay. But are you bullish on the U.S. dollar? And is it possible to be bullish on the U.S. dollar and gold? Could that ever happen?
Well, sure, it could always things like that happen. But I think that the dollar is the strongest factor for the dollar is that the U.S. is importing less oil. There's no war in Iraq. And there's a huge success from fracking, but the benefits of that is going to be America is going to be exporting plastics to emerging markets because their growth rates are so much greater.
All right, so if I had to pin you to some sort of trading range within the next 6 months for gold, I know you love this question, Frank, what would you see?
Well, the normal DNA volatility for gold over any rolling 12 months is plus or minus 15%. So gold could easily fall 15% or rise 15%, and that's 70% of the time. So what are you looking at? You're looking at gold to go to 1150 or run up to 1350. That's roughly what that range it would be.
All right, Frank, thanks so much. Any final thoughts for investors watching?
Just make sure that they have that 10% exposure and they diversify and they rebalance and buy some simple gold jewelry for the loved ones.
For the loved ones. Thanks, Frank, and happy Thanksgiving. Thanks for being with us.
Thank you. Thank you.
And thanks for watching. Our coverage will have so much more for you from the San Francisco Metals and Minerals Conference. Stay tuned to Kitco.com. In the meantime, you can email me at newsfeedback@kitco.com or follow me on Twitter @Daniela Cambone. Thanks for watching.